Let me quickly introduce you to the template we prepared for you. This template will make your financial projections so much easier. That being said, you will still have to have some basic understanding of accounting to be able to complete and read financial projections. Taxes, laws, and regulations are country specific, so make sure you adjust financial template accordingly. The template we prepared for you was created with a limited liability company in mind. If you decide for any other legal form of a company, you should adjust the template. I will demonstrate how to make financial projections using the template we prepared for you. You can find it on Canvas. To make the demonstration, I will follow the data from the case I published on Canvas. First, when you open the template, you will have to enable macros. You should never unlock the template. If you unlock the template, it will stop calculating your financial statements correctly. In that case, you will notice many green triangles in the top right corner of the cells. If that happens, close the template, do not save anything, and start from the beginning. The first part of the template consists of the financial statements, which will generate themselves automatically. The cells are in blue and red font, indicating that we should never touch them. The middle part of the template consists of the data. Here, whenever you see black cells, we will be able to put in our data, but only in the cells where the font is black. The bottom part of the template consists of key performance indicators, which will generate themselves after we type in the data in the middle section. Let's start with the demonstration. Our case is about Justina, who would like to open a hair salon in Ljubljana. She found a location for the business and decided to register a limited liability company. She plans to employ 2 experienced hairdressers and 1 assistant. This seems feasible considering that she plans the salon to be open 5 days a week, 8 hours per day. The business will start operating in September. Justina wants to offer hair services for men only. Men's haircuts are priced at 22 euros. This is the gross price. Given the fact that hairdressing services in Slovenia enjoy a reduced tax rate of 9.5%, let's calculate net sales price. As net sales price represents the base for taxation, we have to divide the gross price by the tax rate plus 1. That is 22 divided 1.095. The net price is 20 euros and 10 cents per haircut. The corresponding value-added tax is 9.5%. She also plans to sell hair gel to her clients. The hair gel will cost 4 euros. As the tax rate for this kind of item is 22%, this means that the net price of hair gel is 3 divided by 1.22, which totals to 3 euros and 30 cents. The corresponding value-added tax is 22%. Now let's specify quantity sold. In our case, Justina plans to sell 150 haircuts in the first 2 months, 200 haircuts in the 3rd month, and 300 haircuts in the 4th month and all the following months. We have to adjust the projections for the 2nd and the following years when she will sell 300 haircuts per month. Justina expects to sell 50 hair gels in the first 2 months of operation, 60 in the 3rd month of operation, and 100 hair gels in the following months. We have to again adjust the projections for the 2nd and the following years. This is the revenue part of the financial projections. Now, we have to consider the costs of producing this revenue. First, let's discuss the costs of materials. We have to consider so-called cost price or purchase price. The purchase price consists of products cost plus any transportation cost or customs cost, for example. To make a haircut, she uses shampoo and styling products. In our example, the cost price of shampoo per haircut is 40 cents. The cost price of styling products per haircut is 50 cents. She needs 1 unit of each per haircut. VAT rate is 22%. Moving to hair gel. The cost price of hair gel is 80 cents. Do not forget to record the VAT rate and expenditure per unit. Now let's consider labor costs. We will record wages under fixed production costs. Justina would like to pay her two hairdressers 1,000 euros per month net. A net salary of 1,000 euros per month costs a Slovenian employer about 1,650 euros. The assistant has a minimum wage. This will cost Justina 1,250 euros. The employee will receive about 780 euros. VAT is definitely not applicable here, so we leave it as it is. Let's record the number of employees. To start a business, Justina has to invest in equipment as well. She has to buy salon chairs, sinks, and so on. As she employs two hairdressers, she will invest in two salon chairs, which cost 390 euros per chair and have a useful life of 5 years. The useful life of 5 years translates into a depreciation rate of 20%. Moreover, the applicable VAT rate is 22%. The sinks cost 400 euros per sink and have a depreciation rate of 20% and VAT rate of 22%. She will also buy two types of scissors. The first type costs 220 euros and has a useful life of 3 years. After 3 years, she has to replace these with new ones, so she will have to invest into two new pairs of scissors of this type in the 4th year of operations, which should be carefully recorded in the projections together with a depreciation rate of 33% and VAT rate of 22%. Let's repeat the exercise with the second type of scissors, which cost 80 euros per pair. Let's add furniture, which will last about 10 years. And finally, cash register, which will last 5 years. Let's move to the stock of materials now. Justina plans to hold an inventory of materials worth 300 euros at any time, which we will record under stock of materials. She also has other expenses. She will rent a place for 500 euros per month. VAT is not applicable here. Electricity is 100 euros per month with VAT rate of 22%. Water 120 euros with VAT 9.5%. Telecommunication expenses of 40 euros per month, VAT of 22%. Note that heating expenses are highly seasonal. She will start the business in September. In October, the heating expense will be 50 euros. In November, 100 euros. December, January, February, 100 euros as well, and 50 euros in March again. The applicable VAT rate for heating is 22%. Finally, we will put accounting expenses under the administrative costs. 180 euros per month with applicable VAT rate of 22%. Now we have both revenue and cost parts covered. But how will she finance her business? If you check the financial statements, you will see that cash is a negative number, which it should never be, and which is a sign of insufficient business funding. The required minimum funding capital for a limited liability company is 7,500 euros in cash, assets, or any combination. The funding capital is recorded under capital in the period -1, since it is invested into the company before it starts officially operating. She will also take a loan of 7,000 euros that she plans to repay in 24 months together with interest. Let's record that under liabilities from financing. The principal payment will be 7,000 euro divided by 24, which is 292 euros. We have to adjust this month by month manually in the template. In addition to this, she has to pay interest each month. The annual interest rate is 4%. Finally, Justina would like to take out 5,000 euros in the third, fourth, and fifth year of operations. Let's put this under profit allocation. This completes my demonstration for today. Before you make your financial projections, you should really check the accompanying PowerPoint slides. They include many useful resources, answer frequently asked questions, and warn you against most common mistakes. Check also applicable amortization and depreciation rates, funding capital requirements, net and gross prices of your products and services and direct materials, the real salary costs, and so on. You just have to have the correct data. The template will take care of everything else.